This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Friday. We are coming to you live, as always, from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleague Sonia, and Surabhi joins us today as well. Guys, good morning.
Hi, good morning. You forgot the most important part. It's December, guys.
Yes, that's true.
It's the start of the best month of the year. At least it's my favorite month. I don't know about you guys, but
the weather's definitely turned pleasant in Mumbai, so I'm not complaining for once. And year's gone by pretty fast.
The weather is fantastic. I mean, that's the one big plus point and big change compared to the last couple of days.
And talking about changes, it's going to be a big month for Surabhi as well. So great month ahead, and a lot of blessings.
You can't just tease it out like that. You got to say. I mean, for those who don't know,
coming up soon.
Coming up soon.
We'll get to it. We'll get to it, guys.
All right. Let's just quickly start by telling you what you need to know as we begin another sort of fresh trading session. You basically have the Nifty now, which is eyeing fresh highs. We said this yesterday as well. Yesterday there was a bit of a pause. The market did pick up in the last 60 minutes or so of trade. We ended at about 20,133, a little closer as compared to the day before to the highs of 20,222. It's a matter of time. We got data points, right? Lots to tackle. The second quarter GDP numbers came through yesterday. The buzz was, and our colleague Lata was telling us that expectations are that the GDP number will actually be strong. It came in stronger than even what consensus was expecting. The consensus was a little above 7%. The actual number is about 7.6%. And of course, we will do a deep dive into these numbers in terms of what this means. But the bulk of the growth is coming from industry, is coming from government capital expenditure. Personal consumption expenditure is still in a bit of trouble spot. So more on that as we go along. But overall number looks very, very strong. But this is a backward-looking data point. Remember, I mean, as we look ahead, what will continue to, at the margin, worry people is what happens to the US, what happens to global growth. If global growth starts to slow down, which is not the consensus expectation, will that hurt growth here as well? The second big cue, of course, is the exit poll results, right? So we got the exit polls for the 5 states which which saw elections, and these polls are a little more mixed than what I thought would be kind of a clean outcome which exit polls would project when we come back this morning. So these polls are giving, I mean, if you just do a poll of polls, they are giving 2 states to BJP, 2 states to Congress as well. The surprises, just give me 1 minute on this. The surprises are Madhya Pradesh, where, of course, I mean, the BJP has been in power for a long time. And it looks like BJP will actually retain MP. So that at the margin is positive. And of course, the other one is Rajasthan as well. Although in Rajasthan, it's always, I mean, it's one party, in the next the next cycle is the next party. I mean, that's been the history going back 30 years. So in that sense, BJP was supposed to come back. But if MP, the BJP wins convincingly, I mean, I think the market will take it with both hands. But the point is the margins which the exit polls are projecting are not very large. I mean, it's not a clean sweep in any state, at least not in the big states of Rajasthan and Madhya Pradesh as well. So I think we need to kind of wait for Sunday to give us more clarity. But for today, I mean, going by what exit polls have given us, I mean, there's no negative in that sense, right? The negative was that it was a sort of a sweep for the Congress or the opposition parties, etc., from a market perspective, which is not the case. It's 2 each, according to the polls. Let's just quickly run you through the global stuff as well. The Dow ended about 1.5%, but the Nasdaq was down 0.25%. So very, very sharp divergence coming through there. Big rally on Dow was led by Salesforce, and we can talk more about that later. The 10-year was up 8 basis points. The yield was up 8 basis points. The dollar index has inched back to about nearly 103.5 levels. This is a little stronger, so a little bit of tightening in financial conditions, but this is just day on day. Oil prices are around 81-ish kind of levels. So they came off even though OPEC Plus meeting agreed on incremental cuts. And I think there is still confusion in terms of how this will be implemented and executed. And that's the reason why we've not seen an upward pressure on oil prices. But I think this is something which we will need to track over today and over the next couple of days as well. Circling back to the levels, I think on the Nifty, a decisive break is, of course, the all-time high, which is 20,222. Above that, the medium-term target is about 20,700 or so. That's one. You got the Bank Nifty, which yesterday crossed the 61.8% retracement of the full fall, but that it did not close above it. That number is 44,700. We left off at just under 44,500. On the way down, the 20-day for the Nifty Bank is the support, which I think should work very well. And that is at about 43,784. Small caps and mid caps, of course, have no problems at all. The small cap index, for example, continued to trend higher starting 10 a.m. in the morning. We ended about 1.25% higher. It was a new high for the small cap index. The GIFT Nifty will come up on your screen, and I think that will give you an indication of the positivity out there. 80 points higher on the GIFT Nifty is the implied open. Sonia.
Absolutely. I guess, as they say, when it rains, it pours, right? And it's pouring good news for the market now. In any case, the sentiment was really positive. I mean, we were all set to hit new highs. And here we have two big cues coming in for the market. As Prashant pointed out, these are the most important cues the street is going to focus on. The encouraging growth numbers. By the way, most brokerages, economists have raised their full-year GDP estimate, their Q2 GDP, full-year GDP estimates now. So Goldman Sachs has upped their full-year GDP estimates by 20 basis points. Kotak has upped their FY24 GDP forecast to 6.9%. Citi has raised it as well. So very, very strong GDP numbers coming in. And the exit polls as well showing that BJP is dominating in Rajasthan and Madhya Pradesh. Not just that, let's not forget that the Nifty is now less than 100 points away from that all-time intraday high. The intraday high is 20,222. And in the last 1 month, it's been a terrific ride for the Nifty. 6% higher just in 1 month. Of course, better performance yet in the broader markets. So the market has sort of broadened in the last couple of months, and that's always a good thing. The FI buying was very strong, but it's largely expiry related as well. So let's not forget that. And global cues have been extremely good. So the Dow is up about 520 points overnight, and it's a new high that the Dow has seen for this year. The only thing is that you have the final results coming out on Sunday. So, there may be a little bit of trepidation. You never know. But the bulls have really tightened their grip on this market, and especially in the broader markets where there is so much participation now.
Oh, absolutely. That goes without saying. And even on the results, what I've noticed in the last couple of rounds is that even if state elections don't go the BJP's way, the market is always willing to look through that and see the the general election at the center as a different event altogether. So given the momentum and the mood, I don't think even an upset might entirely derail the party that's already begun on the street, right? But just going back to the macros, it's not just India macros. We've been getting over the last 24 to 36 hours prints across a lot of the major economies. So I just want to sum that up. And it's actually two good and one bad. I mean, purely if you go by the macro numbers. The October PCE, Personal Consumption Expenditure Index that came out in the US, that continues to show that inflation is decelerating in the US, because that number was 3.5% year on year for October versus 3.7% in the previous month in September. So inflation is a positive cue from the US. It continues to come down. China's manufacturing sector is continuing to struggle. The official PMI was in contraction zone for the second straight month yesterday. I think in the next couple of seconds, we should be getting the Caixin manufacturing data from China as well. That's the private sector survey. We'll see how that goes. Typically, bad news on China macros ends up being good news for India in terms of the market, because it strengthens that whole narrative of moving some allocations away from China into India. So it's usually very helpful, even if we get bad news in the neighborhood on the macro front. Coming to India macros, those numbers are absolutely phenomenal, because they were beating street estimates hands down across the board, and therefore the upgrades that Sonia was referring to, 7.6%, is higher than the RBI estimate as well, which stood at 6.5% for the quarter gone by, so way above the RBI's estimates. And look at the manufacturing number itself. We're touching almost 14% on manufacturing growth in the second quarter. Some of the other sectors like mining, construction, they're all in double digits, up in double digits. So these were the stronger parts. Economists will, of course, quibble over the services sector, because if you compare quarter on quarter, then services growth has cooled off quite a bit. It's just up to about 6% now. And of course, we'll discuss this with experts as we go forward. But the question really is whether the second half will become a little more muted. And that's also, something that a lot of economists are talking about, that this is perhaps a great number, but going forward, we might get a more somber print as the export slowdown hits home and the impact of the cumulative rate hikes of the RBI, maybe that also starts to trickle in through the system. So anyway, Q2 looked very, very good. FII flows have been very, very robust. Yesterday, of course, we had the added, impetus from the MSCI changes that was coming through, plus, all the primary market buzz that's been keeping flows of, up and about. But yesterday's number was very big, 8,147 crores on the FII front, and small selling from the domestic institutions. So, who knows, we are less than 0.5% away from the all-time highs. And given the strength that we have on the macros, maybe today it will be it.
Maybe we'll be here when we see that, right? But November has been the best month for the Nifty this year, by the way. So I don't know if December can replicate that. Of course, everyone talks about a Santa Claus rally, etc. But it's been one of the strongest months that we've seen so far. So, the going has been quite good. Let's get you some money market views this morning. Lakshmanan V of Federal Bank says that the dollar index saw a resurgence after hitting more than a 3-month low, buoyed by robust US GDP data for the last quarter, its highest since 2021. In November, he says, most G7 and Asian currencies were up against the US dollar owing to lower US yields and a weaker dollar. However, he adds the Indian rupee remained relatively stable, trading within a narrow range. He expects the rupee to trade in a range of 83.14 to 83.48 for the next few trading sessions.
On bonds, we've got V. Lakshmanan, who says that bond markets traded in a narrow range and lack of domestic cues. He says economic data from US and dovish comments by Fed officials have kept US yields near their lowest levels in 10 weeks. He expects the 10-year benchmark bond here to trade between 7.2 and 7.35% in the coming sessions.
Okay, let's talk about a lot of the stocks that will be on our radar today. We'll get to that in our top 10 segment. It's Ultratech Cement and Kesoram, where the deal has finally come through. HAL, Protean, E-Governance, SIS, Sterling and Wilson, and ITD Cementation, all on the back of positive news flow. The ones that have negative news flow around them are Whirlpool, Moil and SRF. We'll get you more on them in just a bit.
Dean Kim is now joining us. He's head of global research product at William O'Neill. Dean, good to have you with us here. Thanks very much. Just about at the all-time highs, what's the sense? Take it out with a flourish and head significantly higher, or halt here around somewhere?
Yeah, I mean, it's good to see both S&P and NASDAQ clearing all moving averages and may test year-to-date highs established in July. But the market is a bit overbought as we when we look at the RSI indicator, and we may see a bit of a pullback. What we don't want to see is a gap down in overnight trading that we have seen many times in the past few months. So an orderly pullback would be more constructive. And should we see the market retreat from the current overbought conditions? Right now, pretty much all sectors are recovering from October lows, with only healthcare, staples, and utilities still below their 200-day moving averages. But so far, so good. I'm just a little bit concerned about the overbought condition that we're seeing at the current moment.
Are you concerned about the overbought condition even in the Indian markets? I mean, it's been an 11% rally so far this year, but in November alone, we've seen about a 6% move. Do you think now the Nifty could sort of head into a consolidation phase, and what's the outlook for the next couple of months?
Yeah, I think if we see a bit of a pullback in the Indian market, that's completely natural, I would think. But right now, when I look at the index, the next support there's a rising 10-day moving average. I think it's about 1% below. So that should act as pretty good support. And when you look at all of the other macro factors, such as oil price, being lower than a couple of months ago, as well as US dollar, that's coming down. Those two factors are great for Indian market. So I don't expect any kind of negative shock for the market. But if we do see a gradual sort of consolidation, that's completely natural.
Dean, hi, good morning. We've discussed financials in the past, and you've had a sort of favorable view on them. Now, earlier this week, we had a big day where the Bank Nifty finally started moving and all these big blue chip banks were up and about. What do you see ahead? Do you see some sort of a bigger catch-up move here, or is it too early to say?
No, we're pretty favorable on banks. We've seen banks globally rallying, banks in Europe, even in Brazil. And so, what that speaks to is now that inflation is starting to be under control, we'll probably see, rates coming down. And in that situation, that's generally great for banks. Because that speaks to sort of reflation of the economies. And when we look 6 months down the road, that should be a favorable tailwind for the banks.
Okay. So that's on banks, right? But if we do see the Indian market rally continue, Dean, where do you think the leaders will emerge from X of banks? Are you looking at IT stocks pick up? Are you seeing Reliance come back in a big way? Because that seems to be the narrative now.
Yeah, actually, when I looked at all of the stocks that are setting up, it is broadening, which is great to see. There's a lot of ideas in cap equipment, in consumer cyclicals, consumer names, as well as financials. Now in technology, I'm noticing a lot of smaller companies like Coforge, Persistent Systems, Cyient. Those are all, in my view, actionable. So setup is quite favorable. So it's great to see sort of broadening of the market. So I think that's a positive indicator.
All right, Dean, we'll leave it there. Thank you very much for your time. It's a pleasure, as always, having you with us here on CNBC TV18. We'll take a quick commercial break here. We are back. Our top 10 stocks for the day lined up with our research team. And, of course, we shine the spotlight on the sizzling GDP numbers which came out earlier. Lata will be here for that as well. Stay with us.
Okay, the big cue for us this morning is the terrific numbers that came in on the GDP front. India's GDP grew by 7.6% in the second quarter. This is higher than CNBC TV18's poll forecast of 7.03% and way more than Reserve Bank's forecast of 6.5%. Lata's here to tell us what went so right this time around in the GDP numbers. Lata, morning.
Well, it's not just that it is an upside surprise. It is the extent of the upside surprise. We haven't had 7.6% in a very long time in a normal quarter. I mean, we have it year on year. For instance, we had 13% and 20% when we were over a negative year. But for a normal quarter to generate this kind of growth is perhaps takes you back to the 2004 to 2008 period. And the second biggest thing, which of course everyone's been pointing out, is that this is manufacturing led. Agriculture has been a no-show. It's just 1.2, and I think that was expected because of late rains, early rains, badly distributed. But let me just pause a little bit on the fact that services did not contribute. We've always been a services-led economy, but that's been a bit under the weather. I'll come to that in just a bit. You know, trade, hotels, a very big sector which generates jobs. Trade, hotels, transport and communication has done only 4.3%, and we may have to worry about that. But what we must definitely celebrate is this huge growth in manufacturing or industry and every aspect of it. You know, manufacturing is 13.9. I'm very sure I have not seen this number except, you know, going back to 2004 to 2008 period. Likewise, construction, 13.3. I mean, that's big. Power and utilities, that is electricity, 10.1. Mining, 10. So anything connected with industry is in double digits, and manufacturing at 14% is really huge. Now, the pluses obviously is that the economy needs to be treated as a faster growing economy, and you have seen across the board upgrades. The biggest one comes from State Bank. State Bank was already full year at 6.7. They've upped it to 7%, and Cornwall there at 7%, City at 6.7. So we are now a 7% economy. That's very big. You know, there are not that many in the world. But the fact that it is standing on manufacturing is what is important. So today and for the days to come, please take note of all the Capex stocks, you know, the L&T varieties, the cement varieties, construction stocks. You know, all those are the ones that the bulls may favor. Now for the brief minuses, consumption. 3.1% is a bit of a worry. You know, ultimately production grows only when consumption also gives you that boost. Government can give you that boost, which is what it has done. Capex was very strong. Government private final consumption expenditure went up by 12%. So that was very strong. But, you know, a 7% economy cannot be supported by a 9% fiscal deficit. We have a 5.9 in the center and 3% in the states. That is definitely a recipe for for troubled times, which means this growth has come on a bit of steroids of fiscal deficit, which has to be weaned away. So we can't expect replication. The other thing we should be very careful about, do you remember how the corporate EBITDA performed this quarter? Almost everyone had not a strong revenue growth, but a 30% EBITDA growth. So, you know, that is because a year ago, because of the Ukraine war, all raw materials were expensive. Now they've all become cheaper, and that explained the improvement in EBITDA and the improvement in margins. That also can't be replicated quarter after quarter. Already you can see that in the CRB index. So, you know, we must sober our expectations and not expect 7% plus, but definitely we have to up our expectations about the Indian economy and the Indian corporate sector. This is a new growth pace, no taking away from it.
Okay, all right, Lata, thanks very much for explaining that to us. So big numbers there, particularly on the Capex and the manufacturing side of it, and we'll watch out for those stocks. Speaking of stocks, our team is standing by with the list of top stocks to watch out for this Friday, and plenty of them out there. Let's kick it off with Vivek. He was the one who was always alerting us about the possibility of this Kesoram Ultratech deal, and Vivek, it's finally happened.
Well, absolutely right. You know, last week, Nigel and me had told you about the possibility of this particular deal fructifying quite soon, and along expected lines, it's a confirmation of a CNBC-TV18 news break. What actually happened is that yesterday, Ultratech has announced the acquisition of the cement assets of Kesoram Industries. So Kesoram Industries will demerge its cement business into Ultratech Cement. Ultratech Cement will issue one share for 52 equity shares of Kesoram Industries, which basically goes ahead and values Kesoram Industries shares at 173 rupees a share, indicating upside of close to 24.5% to yesterday's closing price. So now this particular deal has been done at an enterprise value that we worked out to close to 7,500 crore, as Ultratech Cement will assume a debt of close to 2,000 crore of Kesoram Industries, and EV per ton, therefore the valuation works out to close to $85 a ton. This is on a blended basis, slightly lower, so that's quite positive for Ultratech Cement as well compared to the recent deals. So what does Ultratech Cement get? 10.75 million tons per annum capacity, and this will also give it presence in the western as well as the southern markets. So positive deal for Ultratech Cement as well. At close to $100 a ton, they're getting almost 10.5 million tons capacity and significant presence in markets as well. Analysts are quite positive on this particular deal. We'll watch out for both Ultratech Cement, Kesoram Industries today, and also there could be a rub-off on other cement stocks as well, especially in the mid-cap space.
Okay, well, there has been so much action in the cement space, right? Perhaps a lot of people saw this coming. We will be speaking with Rakesh Arora of GoIndiaStocks.com in just a while from now to discuss more about this deal, the kind of positive this means for UltraTech Cement. More on that coming up. But Reema's joining and she has a couple of more stocks on her radar. Reema, good morning.
Hi, good morning. So let me start with Protein eGov, which is a new listing. The company has reported their Q2 numbers. This is the first set of numbers that the company has reported post-listing, and it looks good. The company's top line has grown by 7% quarter-on-quarter. On a year-on-year basis, the revenue growth is more than 30% in the first half of this year. H1 FY24, the top line growth is close to about 36%. Margins are stable at 15.5% sequentially, though it has dropped on a year-on-year basis. The company has also indicated that they are incorporating a subsidiary in UAE for their international business, and they have planned an additional investment of up to 15 crore for the ONDC, that's the Open Network for Digital Commerce. SIS is the other one I'm looking at because the board met yesterday. It's a 90 crore buyback, a tender buyback that they've approved at a price of 550 rupees per share, which is about a 13% premium from where the stock closed yesterday at 486. Back to you.
Reema, thanks very much for that. Let's move on. Upasana is standing by with details on Whirlpool and HAL. Upasana, morning.
Whirlpool Corp, the parent company, intends to reduce stake in Indian arm by 24% from 75% in one or more transactions to repay its debt. The proceeds are expected to be used for a debt repayment of almost $500 million term loan that the company expects to pay in Q4 FY23. The parent company continues to see India as a significant marketplace for growth, an integral part of company's growth strategy. It remains committed to expand business in new product launches and recently acquired Elica India business, and it has also stated that it does not anticipate this announcement to impact previously issued full-year guidance. Next up is HAL. Defence Acquisition Council has approved capital acquisition proposals worth almost 2.2 lakh crores, while DAC has accorded acceptance of necessity for Indian Air Force and Indian Armed Light Combat Aircraft for Indian Air Force from HAL.
Okay, so we'll watch out for this one as well. Thank you very much, Upasana, for that. Sonal is with us. Sonal, why are you watching out for SRF?
Well, SRF held an analyst meet yesterday, and some of the takeaways were important. They said they believe global inventory destocking is coming to an end right now, and from early 2024, the specialty chemical segment should normalize, and they will see normal numbers coming back. However, they believe that pressure in packaging business that will continue for next 1 to 2 years, something that they said after their Q2 numbers as well. Refrigerant gas volumes, they will be impacted going forward because of higher supply coming by, because higher demand of the particular product, but prices is something that will keep this particular pricing firm for them as well. Currently, business is skewed towards agrochemicals, which is more than 90%, and they are seeing more traction in the pharmaceutical business, which will be around 15 to 20% in next 4 to 5 years. However, analysts are not very positive on the stock. Jefferies says they await favorable risk reward before potentially considering turning more constructive on the stock. The target price is 1980, which is around 20% lower than the current levels. They have a hold rating. Centrum says that they do not see any material triggers in the near term. They believe the upside is capped. They also have a reduced rating. Motilal Oswal also has a neutral rating on the stock with a target price of 2,220. So the management commentary did not get in any confidence with the analysts as well. Okay, Sonal, thanks a lot for that. Let's move it across to Vivek now. He has some more stocks in the news. Vivek, over to you.
That's right, quite a few stocks on our radar. First on our list, Sterling and Wilson Renewable Energy. Some positive news flow coming in there. Remember, the company earlier had updated on an indemnity agreement that they had signed, with some of the promoters, including the Shapoorji Pallonji Group as well as Reliance New Energy. So there was a total claim of over 418 crore with Mr. Khurshid Daruwala as well as the Shapoorji Pallonji subsidiary. So now what has actually happened is that one portion of this particular indemnity has been repaid by Khurshid Daruwala, that is almost 75 crore, and there has also been a commitment from Shapoorji Pallonji and Company Private Limited, the subsidiary, to repay the remaining part. So it's a positive new development as far as Sterling is concerned. The other stock on our radar is ITD Cementation, a large order win coming in over there. The company has received a new order of over 1,000 crore. This is for a project in Andhra Pradesh. The project is a 500 megawatt hydel power project, and this is for a pump storage project in the state of Andhra Pradesh. And lastly, some slightly negative news flow coming in for MOIL. The company has gone ahead and cut prices of all of the ferro grades that it is present in, there has been a price decrease by almost 5%, and also the basic price of electrolyte manganese dioxide too has been trimmed further.
All right, thanks a lot. Very helpful there, folks. Here's a quick recap in case you missed out on any of the stocks with positive news flow: Ultratech Cement, Kesoram Industries, HAL, Protean, eGov, SIS, Sterling and Wilson, and ITD Cementation. While stocks with negative news flow: Whirlpool, MOIL, and SRF. But let's also take it straight to Manisha Gupta to find out what's the action been like in the commodity markets. Manisha, good morning.
Morning, Sonia. Thank you for that. I'll start with the crude oil prices, which have seen slipping of 2.5% overnight. This is after the OPEC meeting. And the crude oil prices with this decline are headed for a second monthly decline. Well, the street was expecting a deeper cut given the recent price declines, but that is exactly what we did not see coming in from OPEC and allies. So we have the voluntary output cuts for the first quarter of 2024. So it's a short-term measure from OPEC. And at 2.2 million barrels per day of a cut, it's a very small cut as well, which may perhaps not make any impact as well. Apart from that, the markets also are looking at weak China PMI data. We have the U.S. production, which is at record highs, and the inventory is increasing as well. So all that initial concern about looking at a deficit in the last quarter of this year and the first quarter of 2024 clearly have been faded now. Markets are anticipating a surplus in this quarter and the next as well. And similarly, you have the price forecast as well coming down in case of crude oil prices. The street anticipates that you could be looking at $75 to $85 a barrel of a range for the next couple of months for crude.
All right, Manisha, thanks very much. So oil is down, even though output is also down, right? Will it last is the question. We'll take a quick commercial break here. We'll come back. Ajay Bodke will be with us with some fundamental stock talk. We'll also, by the way, a little later after that, connect with senior journalist Sanjeev Srivastava to discuss the exit poll numbers for the state elections which were released yesterday. Stay tuned.
Welcome back to Bazaar Morning Call. You have so much happening in the market. We are all set to hit all-time highs. We have market expert Ajay Bodke joining us now to talk about how he's placed in the market. Ajay, before I ask you about your sentiment in the market, I wanted to talk about the new listings which have done fabulously well, right? Whether it's IRDA, whether it's Tata Technology, Gandhar Oil as well. What would your pick of the pack be where you will buy even now despite the kind of rally that we've seen? Or are you cautious?
Good morning, Sonia. Thanks for having me on the show. I think all the three names that you mentioned have listed, in my opinion, extremely high, I would say even frothy valuations in certain cases. Just to take an example in case of Tata Technologies, although it is, the business model is quite robust with higher standards of corporate governance and transparency from the Tata Group and the first offering from the group in many years, I think it would rank as one of the most expensive pure play ER&D companies, not only in India, but also globally. What market seems to be ignoring in the current exuberance is the high client concentration the company has, with nearly 55% of revenues coming simply from Tata Motors and its subsidiaries, and more than, I think, 70% revenues coming from the top 4 or 5 clients. Also, the concentration in one sector, 70% of revenues come only from automobile sector. No doubt that the reliance on developing products on the EV side bodes very well for the order flow for KPIT and the Tata Technologies. But the valuation itself is making me a bit worried. At 400 rupees, I think if you look at the valuations, it's trading at roughly 90 times FY23, it's trading earnings, vis-a-vis something like 80 times for KPIT. How long these valuations would sustain is a concern. Also, with the US and European economy clearly slowing down, I think the order flow for the entire ER&D sector, where the orders are more discretionary in nature, also needs to be kept a close watch. On the positive side, the company is diversifying and trying to broaden its revenue streams from defense, aerospace, and energy on the back of orders I think that they've got from Air India as well as from the Airbus. Margins also should perk up by 30 to 40 basis points going forward from 18.6% to around, say, 20% over the next 12 to 15 months. But all in all, I would advise investors to be very cautious. In fact, on your show itself, when Zomato was listed, if you can go back and see, I had cautioned investors to be careful about the frothy valuations of new technology companies. And we know what happened as the funding winter started. So a similar exuberance is being displayed by retail investors, also by institutional investors, because of large flows coming in through the SIPs. In case of many small and mid caps, this is the time to be cautious rather than regret later.
No, that's well put. Ajay, good morning. Any thoughts on this Kesoram deal with Ultratech?
I think it's very positive, Prashant, because if I just look at the internals of what the acquisition, I think it's coming at a very reasonable 91 EV per ton, $91 EV per ton. And what they end up getting is a very strong 10.7 million tons per annum of cement grinding capacity, clinker capacity of 6.3 million tons. But what's important is that they're getting a surplus grinding capacity of roughly 2.25 million tons. Now that's important. So if you look at the overall deal, I think if I want to look at the internals, the surplus grinding capacity can be valued at roughly around $30 per ton. So that's why I think this $91 per ton seems to be very reasonable. And from Kesoram's perspective also, it will help them in deleveraging their balance sheet. And from Ultratech's perspective, like the Adani Group, they have rolled out a plan, medium-term plan of aggressive build-up of organic and inorganic growth. This goes a step forward in terms of achieving that medium-term objective. So I am constructive on Ultratech Group with the medium-term perspective.
Ajay, hi, morning. I wanted to ask you about this whole GDP print and how to sort of play that in the market. Obviously, one way could be just by, through a cement company like Ultratech, like you mentioned. But otherwise, it's scorching growth, specifically on the manufacturing side. What kind of stocks would you look at now after the run-up? I mean, even an L&T has had a 50% great rally this year. So now for 2024, which would be the Capex stocks that you would still consider?
Good morning, Surabhi. I think the manufacturing print has positively surprised the market. And it's mainly led, as you said, if you just look at the internals, the robust demand in cement and steel, and that's essentially because of the lower input cost that one has seen, and the EBITDA growth for cement companies have been particularly strong. Otherwise, the monsoon quarter is when we see a flattening in terms of performance. This time, because of uneven spread of monsoon, the performance has positively surprised the market. I think I would go with some of the cement names rather than some of the Capex names, because the Capex names, again, there's a lot of fraud. I think announcement of a certain order to be implemented over a 3 to 5 year perspective. We have seen that that itself leads to a market cap increase, which is a certain large percentage of the order that has been announced. And this we've been seeing after stock in defense, railways, capital goods companies. So need to be cautious there. Cement companies, in my opinion, still offer good entry points. A company like Ultratech Cement or Ambuja Cement in the large cap, or JK Lakshmi Cement in the mid cap, I think, in my opinion, offers a good entry point. The other point I would like to submission I would like to make is the private consumption expenditure. I think is showing very concerning trends, and there I think a whole host of rural plays I think we need to be cautious about, because the urban demand has held up better, but the rural demand because of uneven monsoon has faltered. And I think hopefully if the Rabi crop is good, I think one should start seeing some sort of a perk up in demand in FMCG companies. Otherwise, one needs to be cautious on the FMCG front. The agri numbers also have come in lower at 1.2% vis-a-vis 3.5% in first quarter. So one needs to be cautious on that front. Government expenditure as well as manufacturing are the only two bright spots in the GDP numbers. Again, a word of caution here. In the second half, as you go, there are 3 points we need to look at. There are weaker FDI inflows. Secondly, if you look at the softness, I think in credit growth due to RBI coming down hard on personal unsecured credit growth. And thirdly, I think normalizing base for the year. So that's what's making me cautious in terms of GDP print for second half. Although the market has been surprised positively, and RBI numbers of 6.5%, in my opinion, should hold good. And market would see people who are below 6% should start perking up the numbers to around 6.5%.
Okay. I have many more questions for you, but I do have to take a short commercial break. So we'll do that. On the other side of the break, Anuj will be joining in for a quick trade setup. Post that, we'll bring you the top stock ideas for the day from our technical and F&O experts. Stay with us.
Okay, welcome back. There's 15 minutes to go for the pre-open session to kick off. Anuj is here with what he's making of things. Anuj, morning.
Morning, Prashant. Call it old age, graying hair or disappearing hair. I'm a bit of an old school, and I'm a bit cynical when everything looks good. Today, you have almost a triple dose for the market. And, the market's already rallied about 10-12%. So maybe a large part of this triple dose was known to the market. You have the exit polls, the GDP and the global cues. The biggest cue today, of course, is that exit poll number, which more or less is suggesting that it's the best case outcome for the market if BJP indeed wins both MP and Rajasthan. And the second big cue, of course, nobody predicted this number on the GDP, 7.6%. And look at that manufacturing number. No doubt, no surprise rather that some of these stocks have been rallying the way they have been, either cement stocks, construction stocks, real estate stocks, anything and everything related to manufacturing, defense stocks, for example, construction, all these companies. And the third big cue, of course, is the global cues, where we had a big rally in Dow Jones. My only worry is now we're getting too exuberant. And the best example of that was Tata Tech's listing yesterday. So, sometimes when you are very close to an intermittent peak, you do see these kind of cues. If you look at the series moves, in any case, now we are due for a pullback because it's been one up and one down series in the last 5 months. So we have had up, down, up, down, up. Now perhaps it's time for a bit of a down series. Having said that, let's look at the numbers to watch out for today on the Nifty and Bank Nifty. On the Nifty, the only resistance now is 20,222, which is the prevailing all-time high. And after that, you want to see what the Nifty is doing there, whether there's a violent rejection or whether the market is prepared for life at all-time high, because the normal instinct is to book some profit around all-time high. On the downside, the first support comes in at 2133, which was yesterday's close, and yesterday's low of 20,015. The Bank Nifty, which has been all over the place, and by the way, financial services numbers did look weak, right, in the GDP numbers. First resistance is 44,765 and then 45,000, and on the downside, support comes in at 44,481 and 44,259.
All right, Anuj, thanks very much for that. So that's the setup as Anuj sees it. Exit polls point to a tight race in Madhya Pradesh and Rajasthan. So it's not a decisive this or that. Although, as I said right in the morning, this is not a negative, at least not for today. But Sunday, in that sense, becomes important to track. We have senior journalist Sanjeev Srivastava joining us right now. Sanjeev, good morning. Good to have you with us here. Thanks very much. These are essentially the exit poll numbers, the various polls which have been conducted, and we'll kind of pull this up state by state: Rajasthan, Madhya Pradesh, Chhattisgarh, Telangana, Mizoram. So they'll come up. But Sanjeev, good morning. Prashant here. Would you characterize the outcome as a little mixed? I mean, putting sort of BJP and Congress slightly ahead in two states, but not by a very large margin. So in that sense, states still in play. Maybe they were always in play, and the actual results is what obviously matter. But what can we take away from the exit polls?
Well, the exit polls are very interesting, to say the least. So the surprise is in Madhya Pradesh, which most people till even about a week back was thinking that it's going the Congress way. And then people started talking about it getting closer. And post-poll, where the women polling percentage went up, people started thinking in terms of Shivraj's government making a comeback, whether he's the chief minister or someone else, but BJP coming back. Rajasthan was getting very tight, which was thought to be earlier easily going the BJP way. So both these states in the Hindi heartland were becoming close, and the exit poll numbers suggest that BJP may take Madhya Pradesh, which will be a big surprise, because after 4 terms of anti-incumbency, if the BJP comes back, that's very good for the party, keeping in mind 2024, next year's national elections. So Rajasthan, it was more crucial for the BJP than for the Congress, because Congress is making good gains. South of India, perhaps in Telangana, they will win. And Chhattisgarh, they are retaining in central India. So mixed bag, but Congress gaining, which is also both good and bad, because bad for the India alliance, whether the opposition will now be able to come together in a more healthy manner with Congress getting stronger. So that's a bottleneck impact for opposition alliance. And the BJP not gaining at all in South India. So they are stuck to the Hindi heartland, Central India, Western India. Whether they can repeat 2024, that will remain a little bit of challenge. But had they lost MP, in the exit polls, it would have been really bad news for the party. So,
Sanjeev?
I may be coming across as a little bit of here and there everywhere, but that's what the exit polls are also suggesting.
Absolutely, absolutely. I just want to take that point forward you made about Congress and the, you know, what's happening in South India, right? Can that be a trigger for them? And if Congress makes some headway in Rajasthan, what would that mean for Sachin Pilot?
Well, if the Congress, let's start from Sachin Pilot. So Sachin Pilot is the young prince in waiting. He's the Prince Charles, actually, who is waiting for the Queen to fade away, which is Ashok Gehlot. So 2018, at least Sachin Pilot was thinking it was his turn. And 2023, he knows if the Congress party comes back and with a slim majority or just around the 100 halfway mark, it may not be his turn again, and it may again be Gehlot. So it was a tricky one for him always. So heads you win, tails I lose. So that's the kind of situation. So if the Congress comes back, Sachin may find himself waiting for next term again, and Gehlot may be the man at the helm, because it will all, at least exit polls are suggesting, and I'm based out of Jaipur. The feel is even if the Congress comes, it will be a very slender majority, or they'll be less than 100, and they'll be able to then cobble together a majority with Gehlot's vast experience and inside track into the independents and a couple of regional parties which may win. So not such great news for Sachin Pilot as far as Rajasthan is concerned. But if the party wins and if the party makes headway, he is an important leader of the party. Let's see where he gets adjusted and how. And if the party by any chance makes a good majority, crosses 107-8 on its own, then Sachin Pilot may have a chance with the party's central leadership intervening in his favor, which they have not been able to do last 2-3 years.
Sanjeev, hi, good morning. Surabhi here. So, over the last couple of, election cycles, what we've come to sort of understand is that people vote very smartly and very differently. When it's state elections, they're voting for local leaders, state issues. And when it's the centre, then they're voting for the Prime Minister, really, whoever that, candidate might be. Do you think that is going to be a pattern here as well? And even if it is, hypothetically, let's say if the BJP manages both MP and Rajasthan, should that be projected forward in any way for May 24? What could be the takeaways from these results as we look forward to the general election?
So, Surabhi, you're absolutely right. People have become smarter. And even when we were traveling across Karnataka, middle of the year, people were saying that they are voting Congress now, but will vote for Modi for the national elections. But an election outcome does make a difference. So if the BJP wins Rajasthan MP, for the sake of argument, then it's very good news for the party. If they lose one of them, then it's not such good news, because some impact it does make. People may still think, suppose, for example, in Rajasthan they lose and the Congress wins, people may still in large numbers vote for Modi because they've separated the two elections, separated the Chief Minister's post and the Prime Minister's post. But it does impact the morale of the worker. And that is where the key difference may lie for 2024. 2024, I still think when you travel, you see a good momentum or really popularity ratings of Prime Minister being high. But if the opposition alliance comes together, if they have lost assembly elections, it does impact. And the key states to watch out next year, I think, will be Bihar, Maharashtra, Karnataka. BJP has lost. It will definitely gain now that Yadurappa's son is also back at the helm. So Yadurappa is also back. But still, will they be able to repeat their 2019 performance? We'll have to wait.
All right, we'll leave it at that. Thanks a lot for joining in and giving us, a quick sense on which way things are headed, which way the wind is blowing. For the market, the wind is blowing in the right direction for sure. Mitesh Thakkar and Shrikant Chauhan are joining in. Shrikant is the Executive Vice President at Kotak Securities to tell us how to approach the day. Gentlemen, morning to both of you. Mitesh, we are virtually at all-time highs. Is this time to get a bit cautious, and what is the recommendation? I mean, will you still go in for a fresh long here, or are you waiting for a bit of consolidation?
So, actually we had a good consolidation last week, and this week has been much more improved showing. My sense is that the markets, I think, look positively biased to me. And while there are always some profit booking when we hit the earlier or the old highs, I think there's a good chance that we'll see continuation and eventually get past those levels. So stay positive. I think around 2200, 2220 zones, you might want to take part profits. But I don't think that will, call for any kind of significant trend reversal in the short term. And therefore, my idea would be to maintain long position, maybe take some profits off around those levels. It's a supply pivot, no doubt about it. But that should be it. And I think eventually we should be able to cross the all-time highs. I would say the odds favor that. Therefore, my bias would remain on the positive side.
Gentlemen, morning. Shrikant, what about you? How are you placed?
Good morning, Prashant. Good morning, Sonia. I think, say, like today, if we see the Nifty is crossing the all-time high of 20,225, then it will have positive impact on the market. However, if we see the sensex is also crossing the level of 67,950, which is almost 1,000 points away, then it will have an even more bullish impact. Because like most of the stocks from the sensex are still far away from their previous highs, like Reliance Industries, HDFC Bank, ICICI Bank, etc. So we need like some support from these stocks also, and to support like Sensex to cross the level of 67,950, we need support from these stocks. So today, I am of the view that if the Nifty crosses these levels along with Sensex, then certainly it will have more bullish impact on the market. And for the Bank Nifty, there also we need the dismissal of 44,800. So if we see all these levels crossing, then we are going to say that we are heading higher. And 20,000 is going to act as major support for the market for the Nifty. And for the Bank Nifty, 44,400 is the level to watch out for.
Okay, all right. Those are the index levels to keep in mind. Mitesh, hi, good morning. Let's come down to stocks as well. What trades would you start with?
Morning, Surabhi. So I will continue the policy of having all buy calls today as well. BEL is the first stock to feature on the list. It's a buy with a stop below 144 for a target of around 150, 151 to begin with. Then I have a buy on Godrej Properties, which I would recommend buying with a stop at 1850 for targets of 1940. A Coforge, which has been a buy earlier, now can be bought afresh and keep a stop below 5700. Look for targets closer to about 5900. And finally, a buy on Loris Labs with a stop at 374 for a target of 396.
And Shrikant, what about you?
Yeah, I would like to go with large cap companies, especially Reliance Industries, which is around 2390, 95 levels. There we are expecting some performance from current levels. So here we should look for adding positions with a stop loss somewhere close to 2360. We can expect 2450, 2475 on the high side. And the other stock which we like is ICICI Bank, which is around 930, 934. There we are expecting 950, 55 levels. And here also we can keep stop loss at 920.
Okay, gentlemen, we'll leave it there. Thanks very much. We'll come back to you for more a little later. 4 minutes to go for the pre-open session. Let's just have the GIFT Nifty up for a quick pick. I think we should be, if we open those levels, we are looking at new highs today itself. So GIFT Nifty implied open 74 points higher. And that is what the indication is. At 20,343 is the GIFT Nifty implied open. We'll take a quick commercial break here. We are back. More coming up on the other side. Stay with us.
Welcome back. Well, we'll start getting the pre-open rates any minute now. And it's a slightly mixed picture across Asia. Let's get some F&O cues in as well before we get to today's market action. Sneha Sheth, derivatives research analyst at Angel One, is with us. Sneha, good morning. What would your trades be? And would you have long positions on the index as well?
Morning.
Okay, don't think
Yes,
we
if you see the kind of expiry we saw, possibility is there that we may see record highs. If you see FI's data, they have been buying. The long short ratio is around 36, which has improved. So overall data looks positive. I believe we may see an up move. Any dips should be bought in. If we talk about individual counters, I'm liking two counters. First is Eicher Motors, wherein we have seen a strong up move from 3,300 odd levels, and it looks poised for the breakout, consolidation breakout, which we have seen recently. So I would recommend buying 3,900 call option in the range of 130, 135 with a strict stop loss of 79, and the target expected is around 227. Apart from this, I'm also liking Delta Corp. Here we have seen nearly 5% above rally yesterday, and the volume also looks good. So I would recommend buying this counter with a strict stop loss of 137.5, and the target expected is around 149.
Okay, thanks Neha for that. All right, guys, I think it's happening this morning, right? 100 points higher is what the pre-opening is suggesting. 20,230 now on the Nifty. So I think we're going to be all here when that new high is hit.
So this is looking achievable, quite achievable at this rate if this is how the actual opening transpires.
It is. But, you know, I just want to put one point of caution here because the rally has really been swift, right? 6%, almost 7% in the month of November. So chasing this rally at this point in time may not be the best thing to do. But let's talk about individual stocks now because there's lots happening. This is a CNBC-TV18 news break, which is now confirmed. Vivek, our colleague, told us last week that Ultratech Cement will be acquiring Kesoram's assets, and the deal has finally taken place. Vivek is here to give us details. Vivek, earlier you were telling us that, you know, this is a win-win situation for Ultratech.
Well, absolutely right. And, you know, brokerages, you know, too echo the same sentiment. In fact, most of the brokerages continue to maintain a positive stance on Ultratech as well as, you know, the entire cement industry. Number one, let's have a look at the deal itself. Ultratech, you know, will take over the cement assets of Kesoram Industries. The merger ratio is 1 share of Ultratech for 52 shares of Kesoram Industries. So the deal values Kesoram Industries at 173 rupees a share, almost a 24% upside to yesterday's closing. What are brokerages saying? Morgan Stanley says that, you know, this is incrementally positive for the industry. They say it reduces the risk of excess supply, organic supply in the medium term. And also it's quite positive for Ultratech according to them because increased footprint in the south and also improved economies of scale, and thus the company has potential for further operating synergy benefits. Goldman Sachs too, you know, continues to maintain a buy stance. They're saying that almost 10.75 million tons of capacity Ultratech gets access to. Along with that, the company has a very strong track record of turning around profitability of its previous acquisitions. Remember, company had earlier acquired JP Associates as well as Brunani Cements. So any similar actions in Kesoram will improve profitability further. And lastly, we are talking about Incred. Incred maintains its ad stance. What Incred says is that the deal is structurally positive from a longer-term perspective for Ultratech Cement. Ultratech Cement, they also say that, you know, they have a long-term track record of successfully turning around assets, you know, that weren't performing so well in the past, like Century, the Century Textile Cement business, Binani assets as well, and also gives a chance for Ultratech to expand its presence in the South market, where it has a relatively smaller market share.
Okay, got that. Vivek, thank you very much for keeping us ahead of the curve on that deal and finally giving us the details now that it has happened. Well, let's discuss this further. Rakesh Arora, founder at GoIndiaStocks.com, is with us. Rakesh, good morning. Glad you could take out the time. So let's first start with the valuation at which this deal has been done. 52 shares of Kesoram for one of Ultratech, as our colleague was just telling us. Do you think Ultratech has managed to pick up a good bargain?
I think this is the right valuation because if you look at their greenfield expansion, they are able to do it at less than $70. So they are paying a premium because this capacity is ready and immediately starts adding to profits. So $85 is a reasonable valuation. But one should also note that it's a swap deal, so there's no cash outflow. So from that extent, I think they might have been a little bit lenient. Otherwise, it would have been, even less, from what I understand.
All right. Rakesh, just a minute. I'm just going to take 1 minute to mention the Escorts Kubota numbers that are flashing for you on your screen. The numbers have come in low single digit in terms of a growth, but the company says in their press release that despite the festive demand being good, a few states' demand was marginally impacted because of scanty and unseasonal rainfall. Keeping that in view, the domestic tractor industry has been almost at record levels. So it's been barely a 3.7% growth that we've seen in the month of November overall, and domestic growth has been about 6.7%. So exports is still under pressure, but domestic growth not too bad. All right, getting back to this Kesoram deal, Rakesh. So for Ultratech particularly, what should retail investors be doing? What kind of upside do you see?
So, you have seen the brokerage reports. Nobody has really raised target price as much because, while it's a good deal for Kesoram shareholders, they have a good opportunity to exit. But for Ultratech, it's a small deal. The capacity goes up by around 7%. So it's not a massive impact for Ultratech shareholders. But having said that, it's an overall good deal from an industry perspective. And I think the winners would be the other smaller companies where there could be more action in the coming months.
Rakesh, what about, the geographies? Kesoram, I'm just going through Nigel's notes. Kesoram, of course, it's got two big units. One is in Karnataka, the other is in Telangana. So in terms of expanding its overall pan-India presence, which Ultratech anyway has, how do you think this will play out in terms of geographies? And which do you think would be the stronger geographies as we get into, the next year?
So with this acquisition, I think, in Karnataka, Ultratech would be around 30-odd% market share. And Telangana, they were not present, so they get an entry. So, it increases the footprint for Ultratech. But then it also becomes a little bit challenging for Ultratech is becoming so big that for them to get CCI approvals for a lot of other acquisitions is going to be difficult. And so one needs to keep that in mind from an Ultratech perspective. And if, people are trying to play, future, consolidation, this could be one of the factors, and it could lower the valuations for future deals.
Okay. You also mentioned briefly that you will look outside this Ultratech Kesoram deal to other cement companies that are, have perhaps better potential over the next 12 to 18 months. What would your top picks be now?
So, I won't really be able to say names, but, there's general guideline for investors here. See, this deal has happened around $85. I think the fair value was more like 80 because the stock swap deal, that's why. So if you're looking for, companies, there's a long list which is going around in the market, which can be taken out. So if they're trading below $80, there's a scope, and always leave some room for, deals not happening. So that is one. Number two is that we are expecting, you saw the GDP numbers, construction activity is going at full blast. There's a little bit of seasonal dip in November, but, the next 2 quarters look extremely strong. So I would stick to, larger companies, with pan-India exposure. Those are the companies which will benefit the most. So stick to large companies to play the cycle, and opportunistically look for, smaller companies where the valuations are low and, you are hearing the buzz of them being taken out.
The deal, there's a share swap, and then they're assuming some debt, right? So is it 8? I mean, so including that, it is 80?
Yeah, it's including $85.
85.
Prashant, it's a moving number. Meaning if Ultratech stock was the 8,000, it was $75. It is 9,085.
Yeah.
So it's a moving number.
Right. And there's no way to kind of, because as you said, there are other assets, and watch out for which are trading under that number. So they may be first in line to whenever more consolidation happens. Anyone's, in your opinion, you want to name names which are there's a long list actually.
Yes, Prashant, the buzzes around Orient Cement, India Cement, Heidelberg, these are kind of top of the rank. Then there's buzz around 2 other names also. So I would say, just keep a check on valuation. Don't go overboard. Beyond $80, $85, nothing is happening.
All right. Oriented about 85, EV per ton. Heidelberg at about 83. So around that same kind of ballpark as you said. Rakesh, great to have you with us here. It's a pleasure. Thank you for your time. And, thanks for joining in this morning. Well, let's talk about the standout brokerage report now. Nimish is standing by with just that. Nimish, hi, morning.
Hi, morning, Prashant. So today's standout is on Hero MotoCorp, a double upgrade from BofA Securities. So they've upgraded the stock to buy from underperform and they've raised the target price to 4,300 versus 3,000 earlier. Remember, the stock is already at 3,800, so another 14-15% upside from current levels. Now, they see few reasons for the catalyst for this upgrade. One, they see the two-wheeler demand finally recovering on ground, as well as getting broad-based as well. So that's the first reason. Second, they see renewed vigor from the new CEO across distribution. And third, they see a favorable risk-reward largely in terms of valuations at 15 times FY25 price to earning, and few catalysts around the associates, which includes Ather as well. While the note says that the EV strategy of Hero Motor is still fluid, but the risk seems to be behind. And on back of this, they've raised the earnings estimate by 10 to 15% for FY25 and FY26. So that's on Hero Motor Corp. But I also want to add, there are a couple of reports on the other two-wheelers as well from UBS. So UBS has today downgraded Bajaj Auto to sell. They have a target price of 5,600. They believe that the market is overly confident about the company's three-wheeler businesses, including sales as well as the margin. So that's a big downgrade on Bajaj Auto. And additionally, UBS has raised the target price on TVS Motors to 2,200 from 1,900. They see multiple catalysts even from current levels, and hence a big target price raised there. So a lot of two-wheelers names will be in focus, but the big will be Hero Motor Corp, a double upgrade from Boffa Securities today.
Got that. Well, Hero Motor Corp has already rallied 9% this week. It's been a great week for the stock. And now comes this double upgrade. Thank you very much, Nimesh, for getting us all of the details. The pre-open is settled, and it's settled just below the all-time high, by the way. Nifty at 20,194. That's what we are getting. And the pre-open session suggests that the Bank Nifty will at least start positive with about a 90 to 100 point opening gain. Mitesh is back with us. Mitesh, let's go over the calls. 9, 10. What would you look at?
I'll go with a buy on Godrej Properties with a stop at 1850 for targets of around 1940.
All right, thanks a lot for that. So buy on Godrej Properties. By the way, ITD Cementation is the stock that's really topping the charts in the broader markets. It's won an order of over 1,000 crores in Andhra Pradesh. So in pre-opening, ITD Cementation is up almost 13%. Look at that. But Sonal is joining in now with today's Momentumizer stock of the day. Sonal, what do you have?
Well, Voltam Transformers, that's the stock on my radar. It was up 8% in yesterday's trading session, and volumes were very high as well. So it traded at around 3.5 times the average volumes that we see on this particular counter. Overall, this year itself, it's up around 100%. This month, it's up around 14%. So the momentum continues as well. Yesterday, the volumes on NSE were close to 1.2 lakh shares, and this compares with the average of 14,000 to 15,000 shares that the stock trades on a daily basis as well. Stock is comfortably above the 20-day moving average after yesterday's move. So I looked at that stock and looked like an interesting move there.
All right, thanks a lot for that. Well, KPIT Technology is also on our radar. Rima is here to tell us why. Rima, over to you.
Thanks so much for that. So there is so much interest around ER&D, particularly automotive ER&D, since Tata Technology got listed and the whole hype around the subscription and the listing. So Goldman Sachs today has come out with a note on KPIT Technology where they've raised the target price further to 1,710. They see a 16% upside in the stock. The reasons are automotive balance sheets. The clients of companies like KPIT Technology, their balance sheets are getting stronger. So Goldman Sachs analysis estimates that the top 22 OEMs, automakers, who are basically clients of KPIT Technology, the companies under their coverage, their cash balance has gone up to $420 billion estimated this year, which compares with about $379 billion last year. So their cash balance is getting stronger. Plus, the companies remain committed to electrification, autonomous vehicle efforts, and they're looking to improve their margins and lower the losses next year. So which is why they continue to remain very bullish on KPIT Technology. And let's see how day 2 of Tata Tech turns out to be. If you remember, the issue price was 500. It listed at 1,200 rupees, went on to hit a high of 1,400 and finally settled above the 1,300 rupee mark. So day 1, it had a stellar, terrific debut. We'll watch out for day 2 of Tata Technologies. Back to you.
Sure. Thanks, Rima, very much for that. I just want to point out on the pre-open, don't forget HAL. Because the Defence Acquisition Council yesterday also approved a lot of orders, and they're looking at these light combat aircrafts, light combat helicopters. Stocks up 5% in the pre-open session, as are a lot of other PSUs. It's been a fantastic week for PSUs once again. And even this morning, PFC, REC, GAIL, it's a long list of Iridia. Let's not forget the recent listing, again 2-3% up on that one as well. The PSU is in top form.
PSU Insurers, New India, GICRE, I think it's been rally time there.
By the way, those are really good numbers from Bajaj Auto. So 31% growth is what we've seen. And the cracker really is coming in the domestic sales for Bajaj Auto, which has come back in a big way, as the management mentioned to us a while back as well. 70% higher in Bajaj Auto's domestic sales. No surprises why that stock has been at a new highs as well. And the management, Rajiv Bajaj spoke to us a couple of days ago where he said that the 125cc plus segment is doing very well. Although the 100cc segment, the mass market segment, is still struggling. Discounting is high there. But their focus is squarely on the 125cc segment. All right, more on that later. But here you have it. That's the first take on the index. 20,200. So we're, within kissing distance of those all-time highs.
18 points more.
18 points away. I think it's just us, right, who bother about these few points here and there. The market doesn't care. The market is rejoicing in any case. So very strong opening. 82 points higher now on the index. The sensex is up about 230 odd points. Let's take it straight to the gainers because let's find out what's leading the market. By the way, the mid-cap index is having a very strong showing. 0.6% higher on the mid-cap index. NTPC, Adani Ports, Asian Paints, M&M, couple of your top gainers. Very strong numbers from Bajaj Auto, so that stock should also come up for you on your screen. L&T, some other heavyweights like Hero MotoCorp, that double upgrade on Hero MotoCorp, that's leading that chart there. Reliance, Hindalco, UPL are all trending in the green. ITC is also batting for the bulls this morning. 20,212 now on the index, so just about getting there. On the downside, you have Wipro, HDFC Bank, Maruti Suzuki. Okay, there's nothing really. I mean, hardly any stocks in the red this morning. Just maybe some underperformance is what you're seeing. Bajaj Auto now is down about 0.3%, maybe coming in for some profit taking, but more on that later. Your top gainers continue to be names like Apollo Hospitals, NTPC, Ultratech Cement. So very good opening for the market.
Oh yes, absolutely. And mid-caps are firing away. Look at the gap, the differential between the Nifty and the mid-cap index. Mid-cap index is already up 0.75%. That's how strong the morning has been. Some names then, ITD Cementation on the back of the order wins is up 11% straight away. And look at that move on Delta Corp. It put on 8-9% by the time we closed yesterday. And now it's putting on another 7%. The whole buzz is that they're getting some sort of a relief from one of the high courts as far as that GST demand notice is concerned. But, the last word hasn't been said on this. So one needs to perhaps tread with a lot of caution as the matter remains sub judice. 6% up on Delta for what it's worth. Kesoram is up 5% straight away. Let's check out what Ultratech is doing. Ultratech is managing some green as well. About 1.5% up on Ultratech Cement. Protean government came out with the numbers for the first quarter. Growth looked quite okay, 2.5% up on that stock. So those are some of the early movers. But beyond news, if I look at gainers today, then there are interesting names. Prestige Estates is off to a very good start. EIL from the PSU space is up about 4-5% as well. And Peninsula Land, because by the way, the tie-up that Delta Corp has done in terms of getting into real estate, that's with Peninsula Land. That stock's up about 5% as well. So these are some of the early movers. Ircon, again, I'm seeing a lot of public sector companies on the price and volume charts. BEL, Ircon, all off to a positive start. So there we have it. Prashant, 20,000. 216, 217, you want to count more? 5 points left.
Yeah, I think we hit a high. At least on my screen.
2220 is what I saw.
Let me just see what the high is. The high, at least on my screen, is 20,222.8. We are nitpicking here, but I mean, if you're counting highs, then, decimal points matter.
Oh, there you have it. There it is, 28,222.
So I think we've hit a new high. Okay. So the last high was made on the 15th of September. And we are now at a fresh all-time high on the Nifty. At least we've hit it today after a spectacular move that we've seen, in the month of November. This week actually is pretty good. It's the week actually is worth 2% on the Nifty. I mean, and of course, the month itself has been pretty solid with the market looking very, very good. So strong gains continue. The Nifty Bank, I don't think is... eventually that it can't be that the Nifty is at a new high and continues moving higher, and a 30-35% of the overall weight does not participate. So eventually that will come through as well. But for now, we got about 1/3% on the bank index, the Nifty Bank index as well. So new fresh highs coming in this Friday. Sonia.
Oh, absolutely. Exciting times, right, if you're a bull in this market. And what a year it's been. I mean, we've had our fair share of, things thrown at us, bad cues thrown at us, whether it is, we started off with, of course, now the Israel-Palestine war. I remember the lows that we hit at that time. There were those Fed rate hikes. Last year, we had the Russia-Ukraine war. So put all of that together, this market has just been sort of climbing every wall of worry. I think it's also the kind of FI participation that has come through in the last couple of months. It's sort of intensified, and India has become the preferred market, with almost most of the experts that we speak to.
Absolutely. But I'd say that this year has also been a story of India itself, of Indian investors and this country, domestic-facing companies. Look at the stocks that are, responding very well to that GDP number today. Look at the stocks that are highest on the index, NTPC, L&T. And it's not like this rally has just started in these stocks. They've had a fantastic year. And they keep going on from strength to strength. IT hasn't been the best performer for obvious reasons. But we've had so many local stories, defense, and all of them seem to be running even now.
Absolutely. We have Nilesh Shah joining us now, Managing Director at Kotak Mahindra Asset Management Company. We also have Anand Shah, who's Head of PMS and AI for Investments at ICICI Pru Life AMC. As well. Gentlemen, great to have you with us here. Nilesh, of course, has been with us every step of the way as we've made newer and newer highs. Nilesh, so it's a pleasure to have you with us here on the program. First thoughts, it was the previous high was 2 months old. There was a bit of a dip, and then we are back at those levels once again. The GDP numbers yesterday kind of showcasing the strength, at least on the manufacturing and capital expenditure side. Your thoughts, Nilesh?
Thank you, Prashant, for having me over here. Clearly, the GDP number, the exit polls, and the participation of investors, both domestic and global, put all these things together, market has reached where they are today.
Okay. Nilesh, I think we are not getting your audio very well, but I'm going to, just try and take that forward. How should investors approach the market now? Because generally, there is this fear of heights, right? When the markets hit all-time highs, you sort of take a step back, allow yourself to, let this market consolidate a bit. Is that the best approach, or should you continue to trade, expecting this market to move up further?
So, Sonia, normally when your market cap to GDP ratio is above 100%, you do get worried. But this time, market cap to GDP ratio is coming on the basis of Triveni Sangam of growth, governance, and green. Our earnings growth is between 15 to 20% better than many peers. Governance standards better than peers, and green transformation of economy. So with the 3G of green growth and governance, my recommendation to investors will be, please follow your asset allocation. Yes, markets are doing extremely well, and they should maintain their asset allocation discipline.
Okay, got that. We'll keep that in mind. Nilesh, stay on. Some more questions for you. Let me bring in Anand Shah into the conversation as well. Anand, good morning. It's turning out to be a very happy Friday for bulls. And, the market has prevailed despite a lot of the worries that Sonia was also alluding to. I think the question people are wondering is that now that we are back at all-time highs, do we go into a bit of a consolidation? Should we be prepared for that? Or do you think there is enough momentum here for this charge to keep going higher and higher? Anand?
Hi, very good morning. So, while we are looking at the all-time highs on the large caps, the rally or the bull market in the small and mid caps had never stopped in that sense, and you've been seeing what's happening in IPO. I think we need to go one step deeper. I think there has been a very clear heterogeneity in the sense that there is a segments of the markets which are doing very well, segments of the market which are struggling, especially within the equity markets. And if you see what's driving these markets has been earnings growth rate, as Nilesh also said. We have a very strong earnings growth rate. When I dissect that further, a lot of this earnings growth rate is coming from three areas. One is the banks, the second is manufacturing sector, and the third is manufacturing allied sectors, which support manufacturing, mid-cap goods, industrial products, utilities, and others. And these are the three areas which were also relatively far cheaper than the market. So very clearly, if you see, this part of the market is actually leading the market, whereas There's other aspects of the market where earnings growth has been decent, but that was expected, and then the valuation being too high, that's sort of underperformed. So I think to me, from here on, and for that matter, for last 1 year, it's been a stock pickers market. You need to be clearly, evaluating your businesses that you're invested in. And as Nilesh rightly said, one needs to keep an eye on asset allocation, use SIPs, STPs, and other ways of investing so that the volatility, because volatility is going to be here. Next 6 months, we have going to be both globally and domestically, we have various macro events which the markets.
Nilesh bhai, you were talking about asset allocation for between equity and debt. Should one increase allocation to debt a little bit? What's the advice?
No, Prashant. My recommendation will be to maintain equal allocation to your risk weightage in equity and debt. In debt, go for longer duration paper as interest rate cuts are around the corner. And for equity, prefer large cap and larger mid cap over mid and small cap. But this is the time to maintain equal allocation to debt and equity. And within that, you can make little bit of adjustment for duration and larger cap stocks.
Have you been, Nilesh, surprised with the astounding response to IPOs? I mean, there are telltale signs, right? As you said, the one is market cap to GDP, but you're not very worried about that. The tremendous response to some of these issuances again, but one has to take a look at the totality of it. Any thoughts?
So undoubtedly, there's too much of money coming in IPO market when you see without leverage 2,67,000 crore coming for a few thousand crore IPO. It just shows investors are now looking to participate in the market, and they are thinking that IPO is going to give me instant gratification. Most IPOs are getting listed at a huge premium. So it's just play for instant gratification in IPO market. But real wealth is, as Charlie Munger used to mention, it's not timing the market, it's time in the market. Buy good quality stocks, stay invested for a longer term, rather than trying to test your luck in IPO market.
Oh, absolutely. I just want to make a couple of mentions on the market. One is that we haven't given up on any of our gains yet. In fact, all we're doing is building onto it. So now the Nifty is almost at a 100-point gain on the index. And the second is that this market has become so broad-based. Just look at the mid-cap index now. Big outperformance there. And this year, the mid-cap index is up almost 40%. While we talk about the Nifty being up about 11%, the mid-cap index is up 38% this year. So broadening of the market is always a good sign. But Nilesh, I wanted your thoughts. There are some new leaders emerging, if you'd want to call them that, whether it's oil marketing companies, whether it's auto companies, whether it's something like, power stocks. So, for example, BPCL, Hero, Coal India have seen big gains in the last couple of months. Where do you see the next leaders emerge from? Nilesh, is my voice reaching you? Okay, I think he can't hear me, so let me just toss that question to Anand. Anand, the same question to you. Where do you see the next leadership emerge from?
I think the other aspect of the market, which, we've been discussing about PSUs in general, but the value outperforming growth. I think higher interest rates also means that the cash flows which are closer to you are more valuable than the cash flows which are far out. And in that context, many of the low PE stocks or the relatively value stocks, which also would have strong fundamentals, good earnings growth rate, would definitely outperform equally fast-growing businesses, but at a very high P valuation because they have more longevity of the growth. So I think that's another aspect of the market which is sort of playing out significantly over the last 2 to 3 years. People are perplexed because prior to 2020, the only way to make money was buying into high P stocks, buying into high ROE stocks, buying into high growth stocks which have longevity. But that's changed. So I think market is very interestingly poised. We have strong fundamentals on the domestic side, which is driving a lot of growth. At the same time, we have worries from the global markets, especially the high interest rates, which is again driving different segments of the market here. The second point, which is why some core sector companies are doing better, why some sort of business are doing better, is also difference between the flows. I think we have very strong domestic flows and relatively weaker FI flows. So the large caps have been trading at a much more sanity, whereas the domestic-oriented stocks, typically the HNIs and retail and domestic mutual funds invest more into mid-cap and small-cap. There we are seeing a sharp run-up.
Okay, got that. Nilesh, hi, morning. Surabhi here. I just wanted to, ask you about the risks, if any. Okay, I don't think we have Nilesh on the line. Anand, so let me ask you about this sort of factor, risks. And we were discussing it with Lata just a while back when the GDP numbers came in that, of course, on the Capex side, everything is firing because that's where the government is spending. But private consumption has not been as robust. And then there is this rural recovery. And, 1 month we think it's happening. The next month we get numbers which are, still anemic. Now, how big a risk is that, consumption in rural? And is there anything else on the horizon that you think we should guard ourselves against?
Indeed, I think there's no denying that rural consumption and overall consumption has been weak. Inflation has been very high. And that's also pushing limits to how much one can spend. But you have to understand, look, for far too long, India was actually consuming a lot and manufacturing very little. And to that extent reflected in a current account deficit that needs to run, especially with China. I think there is a change. And once we get the manufacturing jobs going, once we get the economic growth going, infrastructure creates a lot of jobs, housing will create a lot of jobs. That in turn will loop back into consumption. So I think for far too long, we were consumption first and everything later. For a change, now we are saying infrastructure, manufacturing will come first, consumption will follow. And to that extent, I think I'm not too worried about slow consumption growth as long as we create enough jobs in the market. And for that, eye on infrastructure, eye on capacity creation, manufacturing, Capex, private sector Capex. I think that's something we are very closely watching.
Okay, it's very interesting, right? At a time when the market is at all-time highs, you have other asset classes that are also at all-time highs. Gold, for example, is sitting at all-time highs. Bond yields have cooled off. Interest rates are perhaps moving lower in the near term. So it's difficult to find anything wrong with the market. And that's when sort of you sit up and take a bit of, you get a bit cautious. That's, I guess, a common human behavior. But for now, the going is quite good. I also want your thoughts, Anand, on the auto sector because we've had some really good numbers come through. Bajaj Auto, for example, just reported a 30% overall growth with almost a 70% growth in their domestic sales, of course, coming off a low base. But is this a sector where you see a secular run over the next, say, 12 to 18 months?
Indeed, I think consumption will remain evergreen. So while consumption is relatively slower than manufacturing and infra, but there's no denying that India has this big demographic advantage, and you top it up with falling dependency ratio, rising earning members per family. I don't think consumption is going away anywhere, and we have seen that for the last 20-30 years, the India story has been growth in consumption across consumers, durables, consumer non-durables, autos, telecom, all these areas. The Indian middle class and even at the bottom of the pyramid, people have. So I think auto companies are also starting on a lower base. We are seeing year-on-year growth numbers look extremely good, but that's also partly because of the low base of last year. Nevertheless, we would see when consuming, given that there was a significant slowdown in rural spending, some bit of uptick can be expected ahead of this entire general elections.
No, absolutely. And consumption will stay strong. We are here in the studio waiting to consume our next cup of coffee. So it's coming. I can see it. Anand, great to have you with us here. Thank you very much for your time. Appreciate it. And it's always a pleasure. And thank you for joining us on, what's basically a new high day. 20,235 is where we're at. Mangalam is here with some interesting data points he's pulled up on exactly this, new highs and what's, I guess, led to this, which are the stocks which have done bulk of the heavy lifting. Mangalam, morning.
Well, start of a new month, start of a new series, and we have the Nifty scaling new highs as well after what was a very strong November series. But, you know, between September 15th to now, a lot has changed. September 15th was when the Nifty hit its last record high. And in that, you know, what has been interesting are the patterns or the kind of stocks that have rallied. So between the last high and now, we have the two-wheelers which have zoomed ahead, perhaps on account of hopes of better recovery in the second half of this year and the data that we have so far as well. Hero MotoCorp has been top of the charts, up 26% since the last high. Bajaj Auto and Eicher Motors not too far behind as well, with mid-teen sort of gains coming by out there. The other bunch of stocks that have done well since the last high have been the public sector stocks. So, you know, while you have the oil marketing companies doing well, Coal India is up 23% as well, NTPC up around 11%, and these are just the Nifty stocks that I'm talking about. What's been conspicuous by its absence in terms of gains on the way up has been the two important sectors for the economy. One is the banking space. The banks have underperformed. ICICI Bank, HDFC Bank, SBI down anywhere between 5 to 6%, and they hold fair weight on the index. And the other one is the IT pack, which has been underperforming, continued to underperform. So we did see weakness coming by for Infosys, Tech Mahindra and Wipro as well. The other couple of Nifty losers from then to now have been, you know, something like a UPL or Adani Enterprises. We have seen some weakness in agrochemical, chemical, specialty chemical space as well, as we'll see. But the mid-cap index, the realty index, all of them have done extremely well. Between September to now, you know, some stocks like Prestige Estates, etc., have moved over 65, 70%. But if you just take a look at the F&O pack as well, among the top gainers that we have, you know, among the top 5 gainers, 4 of them will belong to this PSU pack itself. HBCL up 39%, BHEL up 35%. The biggest mover has been MCX with a gain of nearly 67% from last September to now itself. And by September, I mean September 2023. Trent is the other one, which is up 34%. Here as well, if you just take a look at the top losers, we have names like Navin Fluorine, IGL, Rain Industries and Delta Corp. IGL actually is the only one which stands out from a PSU pack, which is actually underperformed, and that's largely because of regulatory issues that have happened. Now that we're at a fresh record high, important to watch out for what the next 6 months hold from a consumption standpoint and all the cues that we have from elections and, you know, all the others that we're going to watch out for.
Okay, thanks a lot for that. And as he started off with, December, our favorite month, right? Santa Claus coming in early on the last trade. But let's focus on Bajaj Auto. Reported its November auto sales numbers just a while back. Very strong sales in November, good growth in the domestic market. Exports are under pressure year on year, but month on month, actually, exports have also improved. There's about a 2.8% jump month on month. So let's get talking to Rakesh Sharma, the Executive Director at Bajaj Auto. Rakesh, thanks a lot for joining in on the show. Just tell us a little bit about what you expect in the next couple of months. Do you think the strong trend in the domestic sales is something that can continue?
Good morning, Sonia. Yes, it was a very good festive. And as you know, we like to look at the numbers from a retail point of view, which we source from Vahan. And best to look at the numbers over September, October, November period, because it covers the full spectrum of festive, takes into account month ends, and it's easier to compare with last year, which had a different festive date. So when we look at that, the industry has grown at about 8%, and you know, we have grown at twice that rate. The good thing is that all segments within the industry have shown growth. And in the top half, which is the 125cc plus segment, where the industry has grown by 9%, we've grown at approximately 3 times that rate. And the other point is that, you know, immediately after the festive, we usually see a sharp drop. But in the last 10, 15 days, we have not noticed that kind of drop, at least in our retail. So this augurs well. And therefore, we think that going forward, certainly, you know, the industry can count on something like 8 to 9% growth. And we will certainly be looking at growing at twice that rate, if not more.
Okay, so you're saying that this festive season, the two-wheeler industry grew at 8%. Bajaj has grown at twice that rate, so in excess of about 16%. What is the market share now in the domestic market for Bajaj, and how does it compare to, say, you know, in the last quarter?
Yeah, so you know that almost 2/3 of our sales are now coming from the strategic focus which we have on the 125cc plus segment. And there we have grown about 5 percentage points of market share compared to the same period last year. At an overall level, also there would be an increase about more than 1% or so. But really in the key segment, which is 2/3 of our business, it's a 5% gain.
Okay. Mr. Sharma, hi, good morning. So the volume picture is looking very, very smart, as you're pointing out, and demand hasn't fallen off post-festive as it usually does. That's good news too. Do give us some sense on what's happening with price trends. I mean, were there a lot of freebies or any sort of discounting during the season to bump up sales? How high is the competitive intensity in the market, if at all? And what's your outlook on pricing come the new year?
Well, there was the usual tactical stuff, but I must say that it was not widespread. It was, I think, those companies which are focused on the entry-level segments. There was a lot of hectic activity, which is, as you know, already a red ocean, so that became redder. Apart from that, there were some sporadic things. I think the industry drove the business more on the basis of new product launches and new propositions to engage with different segments of the customer. We certainly our approach during the festive, not just in this year, but since the last few years, we focused more on engaging with the customers beyond this the tactical promotion.
Okay, and what's the outlook? So, I mean, you didn't engage in any sort of these freebie sort of carrots, but what's the outlook on pricing now as we get into 24?
Well, right now the pricing is steady. Doesn't seem to have any particular reason for looking at pricing, because the material costs, etc., are holding quite steady. The exchange rate, of course, is benefiting us marginally. However, we will continue to look at opportunities. We will continue to look at competition, and something disturbs the equilibrium, then we will definitely re-examine pricing.
Mr. Sharma, good morning. Prashant here. On exports, what's the situation, sir? There's a slight improvement month on month. But I remember when we spoke last on the 1st of November, the biggest market for you is Nigeria, had just seen a devaluation. What's happening there now?
Yeah, so Prashant, the currency continues to be in trouble in Nigeria, and I would say that while there is an improvement month on month in exports, Nigeria and to some extent Bangladesh amongst the big markets are still a drag on our business. But overall, like I've been saying, there is a step-by-step improvement. We have to just wait and watch Nigeria, because they're going through this very volatile period of settling down on some kind of an exchange rate. And we see a month-on-month 5% devaluation, at least on the street, at a street level, whatever the official exchange rate is. So it is still not reached, I think, steady state sort of performance in Nigeria.
So just to follow up here, Mr. Sharma, in the export retail sales, you think you'll be able to do steady state 1.5 lakh units per month, or do you think up until Nigeria recovers completely, you may find it hard to get to that level?
No, most of the other markets are recovering. Apart from there is a little bit of a softness in Bangladesh, but exactly, we are citing, like I said, every quarter an improvement. We are definitely looking at 150, aiming at about 150,000 kind of exports performance. And if Nigeria recovers, if the exchange rate sort of settles down and it starts to recover, and I must say that situation is so difficult in Nigeria, but it is remarkable how resilient the customer and the people have been over there. That they've soldiered on and going about their business as usual. So that has to be factored in, and once that starts to happen, of course, we will cross the 150K.
Okay. A couple of days ago, we were having this conversation with Rajiv Bajaj, and he spoke about how this 125cc segment, which he calls a sports motorcycle segment, has been growing at a very rapid pace, right? And you folks have a big presence there. 50% growth is what he spoke about. Can you just tell us about what the numbers there have been this time, this month? And on an average, on a monthly run rate, what are you looking at in that segment, 125cc plus?
Well, I can tell you, that in this festive, this is our best ever performance for pulsars. We clocked almost 500,000 pulsars, which is our brand, main brand for the 125cc plus segment. So that this 125cc plus segment now accounts for 50% of the industry, and like I said, 65% of our business. And this is a very good indicator of, the trends of up trading in the Indian customer, the confidence and optimism slowly sort of percolating down to the customer, which sort of helps them to make a choice of a better motorcycle, where you then get, more degrees of freedom to differentiate through product performance, features, etc. So it augurs well. And I think these trends will continue. There is a lot of action also in this space, which is very good because more and more products get launched, and that's very exciting for the customer. So when you put all of it together, we are very, very confident that, and we've been sort of betting on this segment quite a bit, developing products for this segment. So this kind of a trend should continue well into next year.
Mr. Sharma, finally, as we're wrapping up, I think if there's one thing that 2023 will be remembered for when it comes to the two-wheeler space, it's going to be the war of the big bad bikes, right? The premium segment. I'm talking now 350 plus, because that's where the headlines were. That's where the new launches and the competitive intensity kept increasing. And I think just a couple of days back now, Eicher is talking about the new Himalayan, the shotgun, and in the super heavy 650cc category. Just tell us, what's happening with Triumph? How is the market taking up a lot of these new options that are available? And if you can share any, early market share details with us, that will be great too.
Well, the war, as you call it, has just begun. So I think more than 2023, it'll be 2024 where the action will blossom into full scale. And mainly because, we launched only in July, and August is when you started to see retails. We've taken the approach of being very, very sensitive to customer experience. So we have taken the path of having exclusive showrooms and service centers for the Triumph brand. And we started with about 14 in July. And as we speak, it's about 55. Hopefully, we will be able to close about 80, 90 by the end of the year. And but even within these 55, some of them have come on stream only in the last couple of months. We are getting very, very good indications of the acceptance of our product. We had, retails of almost, I think, about 2,700 units in these 50 centers. And in some places, I would say that the market shares are like coming close to 15 to 20% in this. But it would be too early for me to start waving the flag on the basis of these market shares. We would like to give it another 6 months. But I can tell you that the product acceptance is very good. And as we expand network and as the word goes around, we are very, very confident of progressively increasing market share on a national basis.
Okay, that sounds great. And I'm sure all your stakeholders, customers, investors, everybody is going to be watching this space. So just for clarity, you said 15 to 20% market share. This is in the 300cc above category. But how do you define that category, the super premium?
Yeah, that's exactly. It's in the 250 to 500cc segment. But I must point out to you that this is, because I don't want people to get misled by that number. This is very selectively, I would say, this would be the best performance in a particular city without naming the cities. So we are sort of seeing this as a leading indicator that in some of the cities where we've been there now for 3-4 months, this is the kind of market share which one can reach. And of course, a lot depends on now how we expand the network, and how we take customer experience forward, and how the message sort of continues to go out to newer and newer customers, persuading them to take on the Triumph brand.
All right, we will let you on that note. And once again, congratulations on a strong set of numbers, on all the work that you folks are doing, especially in some of the new areas like CNG, etc. All the best for that. Thanks for being with us on the channel. That's a good set of numbers coming in from Bajaj Auto this month. By the way, Flair Writing has settled much higher. Well, it's IPO season, right? You can't, I mean, anything and everything is flying. So it's settled at 501 rupees versus the issue price of 304.
300 to 500 in a day.
Can you justify it?
It's just incredible. I mean, Tata Tech, for example, we were talking about this in the morning. It suddenly made KPIT look good, valuation-wise, right, in one day. So it's just quite something. The market, by the way, is doing very well. 95, almost 100 points, 20,230 is where we are at. So basically just pretty much holding on to the opening levels. There's lots of new stocks into the mix, and we'll talk about that just in a bit from now. But we're going to stay with auto space for a bit longer. And this could be big news for the Indian auto sector as a whole. The JSW Group and China's SAIC Motor, MG Motor's parent company, have announced a strategic joint venture that would focus mainly on green mobility. My colleague Parikshit is here with more details on this. Parikshit, take it away.
This is indeed big news for the Indian automobile sector. The JSW Group and MG Motor India will be coming together for a joint venture. This has been speculated for a few months now, and CNBC-TV18 has also reported on this. Now we can confirm the JSW Group will be picking up a 35% stake in MG Motor India as per the terms of this joint venture. Both companies will work together on increasing the localization of component and work towards electric vehicles and green mobility, also increasing charging infrastructure around the country. In fact, we are getting to know from our sources that JSW Group wants to enter the electric vehicle space in a big way. They want to get a big pie of the electric vehicle market and also want to localize heavily over the next few years. What does MG Motor get through this? MG Motor's proposals, especially on FDI, had been pending with the Indian government for the last few years. MG Motor India is owned by China's SAIC Motor. These talks with JSW had been going on. MG had earlier announced in May that they have a plan to completely Indianize the company and divest majority stake to an Indian company and other private equity investors and other shareholders for that matter. So for the moment, a 35% stake has been picked up by JSW Group. What we will see in the next few years is work towards an IPO as well and a complete Indianization of the firm, as MG Motor has earlier spoken about.
All right, thanks a lot, Parikshit, for that. Let's slip into a quick break. When we come back, we'll be joined by Capex Jain, the President and Group Chief Financial Officer at IIFL Finance, to discuss your business outlook and the impact from RBI's loan provisioning norms. Stay tuned.
Welcome back. Well, let's put the spotlight on the financial space now. We've been speaking to players from the banking and NBFC sector to assess the impact of RBI tightening the loan provisioning norms to check the rapid surge in unsecured retail loans. Today, we'll be speaking with the management of IIFL Finance. The company's president and group chief financial officer, Capex Jain, is with us. Capex, thank you very much for taking this call. So it was a sort of a twin-pronged tightening, right? One on the unsecured side, all the personal loans, credit cards, etc., and the other was that the lending that's happening to NBFCs from banks. Let's take up the second part first. I mean, how might this impact you, your cost of funds? What are the conversations that you've had with your bankers of the past couple of days?
Well, the only exemption to that is any lending to housing finance company would not be having higher risk weight, and any lending towards private sector will also not have higher risk weights. Subject to that, for a normal bank borrowing, the risk weights at the bank side would be higher when they're lending to NBFCs. So at aggregate level, our impact is lesser, but the banks would likely to raise their rates. There's no reason why they would not, because they would now allocate higher capital. So that's where there's a disconnect. We would be representing to RBI saying when banks are lending towards a secured asset product, then they are not need to levy a higher RWAs when they are lending directly. However, when we are lending to NBFCs like us, which is largely into secured products, by general law, they would now put a higher risk weights, and therefore banks would be benefiting, and we would be at a loss, and we would have to either increase the rate of interest to our borrowers or either hold back some of the lending here. So our representation will be going to RBI in a day or so, requesting them to revisit this because this might impact the overall borrowing cost for the MSMEs and SMEs in particular, who are taking these borrowings for commercial reasons and not for personal.
So, Capex, exactly, that's what we wanted to understand while you make the representation, and let's see how RBI responds. What is the increase in cost of borrowing that would have been calculated as of now for let's say, IFL Finance?
So it is actually too early because no bank has come to us about their on hiking our rate of interest. But let's assume that they hike it up by around 25 basis points for a 25% RWA. On an aggregate basis, I have a 15% of this borrowing which might get impacted. So the overall impact for now looks very minuscule, maybe around 4 to 6 basis points, depending on how much the banks increase their rate of interest for such kind of bank borrowings.
So
at a consolidated,
right, Kapish, hi, morning. So your borrowing from banks is only 15%?
Yeah, at a consolidated level. So I've got IFL Finance, where the bank borrowing is around 26%, which would get impacted. But given for the housing finance company, they are exempted. And the Samasta Microfinance, which is all private sector borrowing, they will also not get an impact. When it converts to an aggregate level, the impact is around 15%.
And all of it is most of it is floating?
They would be. So I'm only talking about the borrowings from banks which are of floating nature and might get impacted with the RWA.
No, I'm talking about your customers. They're all on most.
Oh, for my customers, they are actually by nature they are fixed rate borrowings, lending. However, the agreement does allow us to hike up the rates on a prospective basis if there are regulatory reasons behind it.
This representation that you're making, is this because we've heard it from other NBFCs over the last few days as well that they're seeking clarity? So is this an industry representation which is going to the RBI or what's happening?
So there's a body called FIDC which just represents NBFCs. So FIDC does making a representation. This might impact the lending to MSMEs for commercial reasons or would increase the rate of interest. So there's a general representation which has gone to RBI. We are just topping up with something more specific to us.
Okay. Capesh, hi. Good morning. I wanted your thoughts a little bit on the overall business as well, what you're doing in terms of asset quality. What is the situation now? And given the kind of improvement that we've seen in the economy, do you think that there could be further improvement in your own business and your asset quality?
Our asset quality is holding fine. Across product segments, holding fine. We have given a guidance of an NPA of not more than gross NPA of not more than 2%. We are shade lower than that, around 1.8. And if I shave it off and if I slice it off across products, they're all holding fine. The one big barometer for asset quality check on a near-term basis is how is the collection efficiency looking, what has been the bounce rates, and so that way they're all operating fine. So I don't see any concern on asset quality. Across organizations, and more particularly for IFL Finance, we have been a little more focused here, making sure that we have teams which are dedicated to early bucket collection and the hard bucket collections. And with their expertise coming on the ground, the collections are very closely monitored.
Okay, but you're not seeing any stress at all across whether it's gold loans, home loans, in the sort of rural side of the market. I'm just trying to understand whether you see any stress there. And also in terms of growth, what kind of growth targets do you have for the full year?
So over the last 5 years, just reversing it a little, we've grown at a CAGR of around 23%. We've seen COVID in those times, liquidity crisis also hit us. Going forward, we've given a guidance that up till FY25, we look to grow at around 25% CAGR. We seem to be on track at this midpoint check at H1 of FY24, where we have been able to meet the 25% target at an aggregate basis. We've expanded significantly, added a lot of branches across all our product segments, be it gold, home loan, MFI. With that kind of expansion that we have done, we believe that we should be able to sustain the growth target that we have given to the market as a guidance. Purely by expansion and distribution, you have the reach available to them. Yep.
Okay, sorry. Yeah. Just to just very quickly cover 2 points. One is just give us the extent of unsecured exposure in your book. As like you mentioned, home loans are fine, secured, MFI is fine. But how much of your book is unsecured? And give us just the thought process behind this Japanese loan that you've taken, the ECB that you've done with the Japanese bank. Why that source? Are the funds cheaper? And where does it take your blended cost of borrowing?
So coming to the first question, unsecured, you need to further dissect. So our overall unsecured portfolio, MFI is around 15%. 10% is in the unsecured portfolio otherwise. But then if you need to slice it off, unsecured for consumption purposes. That's where the risk weights are supposed to go up. So if you're looking only that segment, then my unsecured portfolio is around 12-13% at a standalone IIFL Finance level. But if I aggregate all my aggregates all the other companies as well, there the number falls in even lower at around 7 to 8%. So therefore, unsecured portfolio at aggregate basis is a single-digit number. For unsecured given for consumption purpose, that's where the risk weights are going to get impacted.
That's 12 to 13% at IIFL Finance level you mentioned. And there you'll be passing on the higher cost of funds when risk weights go up. So will it be very simple that loans simply get a little costlier? Do you see that impacting your growth?
No, not really, because the portion of unsecured portfolio in our overall book is very minuscule. And given even if the growth tapers down at an aggregate level, it really wouldn't make a huge difference. It's a single-digit portfolio and at overall AUM around 73,000 crore. So therefore, even if it tapers down a little and goes slow, it doesn't really going to make a huge dent or impact for us on our overall growth numbers.
Okay, and Kapish, just 20, yeah, exactly. Yeah. 20 seconds left on that. If you could talk about the loan from the Japanese bank.
So loan from the Japanese bank, so getting a loan from a Japanese institution is really a testimony of our performance and our credibility as well. It opens new doors for us. It is not easy to open that market because these institutions are fairly detailed, very specific, and they would need to draw a lot of comforts on overall performance. So we believe that this is going to open new markets for us, more particularly a Japanese market is more of a developed market, and will make availability and acceptability of our debt paper far bigger in the global space as well. The funds have come at a very good price. So the funds have come at a decent price, almost in line with the rate at which we are borrowing incrementally, maybe a shade lower. So therefore, both ways is going to be really beneficial for us.
Okay. Got it. Kapish, great to have you with us here. Thank you very much for your time. It's a pleasure. Speaking with you here on CNBC. Well, the market is up 115 points, but I think we are just going to look at the new listing which has come through as well. Flair Writing is listed at a premium of 55%, so 470 rupees as opposed to the IPO price, which was the 300 ballpark. So that's a hugely positive listing coming through, and this week has been absolutely fantastic. For the the new listings which have come in. We'll, I think, have more on this in a bit from now, but I think Mitesh is with us as well to take us through what he's making of the rally so far and whether there is potential to build on it. Mitesh, good morning. What's your sense? I mean, Sunday, of course, we get the actual election outcome. Is it possible that the high that has been made in the first hour perhaps becomes a bit of a cap and then we spend the rest of the day either here in this range or perhaps even see some profit booking in the second half?
Morning again, Prashant. I think, given the fact that we are now trading above all-time highs, we had a gap up opening and we are seeing follow-through. I would possibly bet that the rally might see continuation. And of course, there's an event coming up, so that risk is there. But looking at the strength, I think, believe that there's a higher probability of us extending our rally to about 2450, 2550 zones. And till we see the gap which is created today, which is basically if we don't break below yesterday's high of 2150, 2159 actually, but then that's the round number. So 2150, I think maintain long bias and continue trading with positive positions on stocks as well as indices.
What about individual stocks? What are you looking at, Mitesh?
There's a breakout happening on charts of L&T. It had about 3 or 4 highs around the level of 3120 and now it's moved above that. It's slightly moved up in the last few minutes, but I think let's say if we get a minor dip around 3165, 3160 as an entry point, buy with a stop below 3120 for a target of 3250 to begin with, and then we'll even look at higher levels eventually over there. And the other stock which I like, that's MGL, which is trying to break out of a consolidation. So that's a buy with a stop at 1040 for targets of 1085.
Okay, let's slip into a quick break on that note. Thanks a lot, Mitesh. Have a good day. Manisha joins in with the commodity update on the other side, so don't go anywhere. Stay with us. Well, it's still all-time highs in our market and we're not giving up on it just yet. So that's a great thing for the bulls. But let's find out what's happening in the world of commodities. Manisha Gupta is here. Manisha, what's the one commodity you're looking at today?
Well, Sonia, I'm looking at the crude oil prices where we saw 2.5% of decline overnight and the pressure continues in the Asian markets even now. We have posted back-to-back 2 months of declines when it comes to the crude oil prices. And for the month of November, we also already have seen nearly 6% of a cut coming in for the crude oil prices. October was around 5.5% as well. So it has been deeper cuts coming in for this space. $80 just about holding when it comes to the Brent prices there. Well, this is because the street was expecting deeper cuts given the recent price declines. And OPEC clearly did not deliver that. There also was a meeting on 26th of November, but with the kind of discord or disagreement that we saw within the members, the meeting one had to be shifted to 30th of November. And within this as well, we have seen the voluntary output cuts for the first quarter fall short of market estimates. So one, it is for a very small duration of only first quarter, and the decline or the output cut has only been to the tune of 2.2 million barrels. So that is what the markets are digesting right now and giving up on the longs that the street had created ahead of this meeting there. So let me take you through on what the OPEC really has done in sense of output cuts. So the heavy lifting clearly continues in from Saudi Arabia, the voluntary cuts at 1 million barrels per day, and then comes Russia with 500,000. Earlier, Russia was cutting 300,000, so they've added another 200,000 to this one. And then you see continuous decline coming in sense of voluntary cuts there. Iraq and UAE, anywhere between 200,000 barrels per day is what you're looking at. And then the kind of cuts that we've seen coming from other members within OPEC have continued to decline, and 50,000 barrels really is quite insignificant in that sense. The other thing also to note is that many of these OPEC members who have put forward these voluntary output cuts, none of them are from African countries, and that is where the discord between the members was in that sense there. So most of the market analysts now believe that the kind of deficit conversation that we were having for this quarter and the first quarter of 2024, that perhaps is not the case anymore. You could actually be looking at a surplus because we are looking at record high production from US at 13.2 million barrels. The US inventories have been rising. We've seen China data come in on the weaker side. The demand also has been declining. So whether you look at the demand side and supply side, we are in good shape right now in sense of supplies there. What the markets will watch out now is the Jerome Powell statements in US today in the evening. Further macro kind of direction would come in clearly from that.
Thanks a lot for that, Manisha. Let's slip into a quick break. On the other side, our special Indianomics segment. That's the big headline, right? The GDP numbers rock solid at 7.6% in Q2. Lata will get chatting with experts to discuss that stellar number in just a bit.